No.
Oh, okay.
It
Welcome
says
to
we're live.
another.
I think we're live.
Let me check.
Let me I need the link so I can share it.
Oh, there you are. I typed in ZX and you came up on Google
Really? That's good.
search, yeah. But like on the first page, so I clicked it just to try and bring the rating up.
Oh yeah, there's this
Where
other guy called the Mayor ZX.
dare you? I know I did a ZX, yeah, ZX.
There's two Mayor ZXs.
Yeah, one's a gamer, but you just need a bit more time, you'll get above him.
But I've got the Emir ZX on the channel. He doesn't have it. Right, let me put this on.
Oh yeah, it's your life.
Let me just tweet this. We'll start and I'll tweet it in a second. So basically, you probably didn't watch my crazy long stream yesterday.
I had no time, sorry.
Sorry, bro. I don't expect you to watch it. It's pretty long. I was just kind of bored. And I was like, okay, I'll just get on.
I guess it's therapeutic in some ways.
Yeah, and also I'm imagining that the world is watching, and like maybe someone will find it useful. I thought it was useful because I came up with those two ideas, and they both came out correct, potentially correct. So this was the Inge one, and obviously, oh god, this yellow line was the original idea. Into the golden pocket, into the point of control, and literally it was front run. I said I wouldn't short this because I'm looking for something else on the higher time frame, but it was an effective short. The thing about these shorts is you have to take profit because you're still shorting against a bullish momentum, which is the problem. Yeah. So if anyone is not familiar with momentum, then what you need to do is you need to get this indicator called the moving average ribbon, and it gives you an idea of the momentum. So here you see when the price is pumping, these lines, these moving averages line up from yellow through to red in a kind of fiery color, and once you've got them lined up, it means the momentum is bullish, is upwards, and before the price can actually come back down, it has to kind of turn these moving averages to flat before, and then obviously if you change it to a higher time frame, you'll see that on the highest time frame or the higher time frames, like the 4 hour, you can see the momentum is still bullish. And what that means is that you end up with the price not being able to just go down. It kind of does that.
Yeah, it's gonna like fit pan down.
These
probably.
kind of flatten out, and then eventually when it gets to when they're all flat, you get like the price comes up, back tests all of them at the same place, and then it crashes, something like that. And so as you can see on the 4 hour time frame, look at that, with crazy momentum is up. On the daily time frame, look, it's only really just begun, the momentum. And sometimes when the momentum actually hasn't begun, it began down here when it went flat. At this point, when the price was here, if the price had come down like that, it would have been possible to go up and drop because of the way these moving averages are crossing, but it didn't do that. And now we're back into the same. This is the kind of pattern you want to see for bullish continuation. But let me see what the weekly's looking like as well. Look, the weekly's only just. Look at that, David. Look.
Yeah.
So this is actually still really bullish on the higher time frame. But on the lowest time frames, it's gone flat. So when that happens, you're basically looking at a long period of sideways action. And yesterday what we had, let me pull that out. Yesterday what we had.
That diamond pattern, didn't you?
I was originally looking at this diamond idea, something like that. My initial idea for a short was here. That was the original idea. That was literally the best short in this whole price action, because that hasn't even been taken. The liquidity hasn't even been taken from that short. The next idea was to come back and back test this golden pocket from this pivot down to this pivot. And now this is much more difficult, because not only was it front run in the first instance and didn't come in to test the golden pocket, the second time it was front run as well. So let me just delete these lines now. If you zoom in on the 30-minute a little bit, can you see that it doesn't even get to the point of control? It takes out the liquidity on this candle and then it falls again. So obviously people were shorting, but the thing is that they were also taking profit because and then there was an injection of volume. See that candle there? So the price came right back up. It stopped all these people out. There was some more shorts coming in. The shorts took profit. And then there was added volume now. People are trying to buy that reversal. Pushed it up all the way into the value area, all the way into this previous 618 area. Took profit. Obviously some people entered shorts again. Lost this golden pocket. Came back, played around a little bit, eventually lost it, and now it's trading down. My idea is you need a reaction off the golden pocket. So actually, in theory, in hindsight, and hindsight is always 20/20, this was too soon. This was too soon. Let me see if I can share this. Hold on. Because I want to share this so I can...
I was trading all of that. So.
Yeah, I was giving all my trades. I wasn't trading it. I was giving all my trades to David. David is trading all of it. David, you can take us through it in a second. Hold on. Let me just try and share this stream, because I don't know what I'm doing. Your channel dashboard. Where's the sharing link? I don't know. I don't know.
What, because me thing?
No, I'm just thinking about myself. That's it. Share, that's it. Copy, link. Go back to Twitter. Because I want the thumbnail. I don't just want to share a link. Where's the thumbnail? It should thumbnail in. There it is. Alright. What was my title description again? Should thumbnail. Can you see my screen? My Twitter.
No.
It's not on the stream. They probably can. Okay, hold on.
Yeah, I can see it on the stream, but on the Meet, it was showing me your English screen. Now I can see you.
All right, let me just post that, so at least maybe one or two people might be interested. All right, so I don't look. How can you buy this? I'm sorry. How can you short this? Look at the price. It just walks through the golden pocket. So obviously, if you're looking for higher, you might be looking at a swing failure of this level, which never came. Because it never came, maybe you were trading the reaction of that, but you'd have to have good risk management, because this could have gone up, could have continued. Now, my idea was that you'd claim this level, you lose it. And this is the thing, even though in my mind I had because none of this had printed, the price action was just here, none of these candles had printed, and I was thinking, okay, we'll go up, nicely back test this area and just drop again. This obviously, that never happens the way you expect, so you have to think about how to enter. In this circumstances, the minute it lost the golden pocket, so in a minute it came back under, so it went above, it came under. Now you're looking to enter, okay, because it's claimed a level and it's lost the level. This is the level that my level of interest. So this is the back test now. This is the test you're looking to enter on, right? But your short, if you're going to take a short, your stop can no longer be here. It has to be here. Has to be here, right? And if the stop was here, because that is the high, the pivot that's been printed, this first short wouldn't have been stopped out, because what actually happened was that certain people took shorts, the price came down, and if people had a smaller invalidation and put their stop there, they would have been stopped out. And then it went down anyway, right? So you either get stopped out, you have a smaller invalidation, or you have a wider stop, you don't get stopped out. And if you get stopped out but the price still does what you want, you can still enter, so you get stopped out, you can still enter for a short. And the way to know that you're going to short this is the minute this candle closes underneath this golden pocket, this red candle here, that's when you can short. But that's when you can short. Because you've taken a liquidity for this, then you can have a smaller invalidation. So in the first instance, your invalidation would have to be up there, because you're going back in time, you're going, where's the nearest pivot to put my invalidation? It would be this high here. So if you were trying to enter here, this would be the pivot. But if you put it down, if you took a short and you were stopped out, it went down and it stopped you out, and you were taking another short, because you've just taken the liquidity from this previous high, then you can put, that's like an SFP of this previous high, then you could put a much tighter invalidation on the current level, which is there. So it's a bit kind of complicated and technical, but the more and more you see this and practice what you would do in your mind, in the future as it happens, you'll go through those same checkpoints as to how to do it and what you're looking for in each, because usually what happens is history always repeats itself. And so what we're seeing now, it may not repeat next time, but in 10 or 15 times in the future, you'll see exactly the same thing happen, exactly the same behavior. And you have to be prepared for what's going to happen, so that when it does happen, you know exactly what to do. The idea was correct. The short idea was absolutely on point. Yeah. Look at it. It's gone up and the short was correct. Now, does it mean that the price is going all the way down there? No, it doesn't mean that. It just means that if you had shorted these areas, you'd be in profit right now. But you still have to take profit, because the value area low is here. So if you were into the short, you would have taken profit. But if you haven't taken profit, you have to take profit now, because you're into support. Yeah. And then you take profit, enough profit, so that this trade, if you took this trade, if you enter the short somewhere here, this becomes a risk-free trade, so that if you go up and get stopped out wherever your invalidation is, that the loss on this stop loss is less than the profit that you've taken, so that whatever happens, this is a profitable trade. That's how it works. If you're not doing it like that, then you're not doing it the way it should be done, basically. And that's how you do it. Now, if this stops you out, it stops you out, then you look for another entry if you're looking to short still. If not, then you look for another trade. But if it doesn't stop you out, then you could still, that small runner that you've got running, could still go down, and the target would be somewhere in these lows. And the way to do that would be to do a little range pull of these lows somewhere, and you'd probably be looking to take profit in the first instance somewhere here, point of control. And to be honest with you, it looks pretty disgustingly ugly by then if the price is going down there, and you could form like some kind of head and shoulders. So you'd still take profit, but it may still go down, and until the market structure changes back to bullish. See, right now on the local market structure, this is a lower high. So you've made a lower low, lower high, lower low, lower high, lower low, potentially lower high. And this can continue for a while until we eventually go to a higher high, and then a higher low, then a higher high, and then it goes back to bullish. So while the market structure is still on the local time frame bearish, you'd still be thinking about shorting. But at the moment we're still ranging, and this is the thing, like, we're still ranging. We haven't broken down. So this short of yours, David, could get stopped out.
Yeah, I was still ranging.
And then you took some shorts yesterday.
Yeah, took some shorts. You
want to show me?
Basically using the first shorts were your diamond idea. I think I shorted the day before. I shorted Sunday, yeah, and then I shorted in the evening. So I shorted in the daytime. Got my profit. Set break even. Got 2 profits actually. Two take profits. Basically made about 2%, and then set break even, got stopped out. And then I did it again. It went higher. I remember looking at the hour chart, and there's this really nice doji after a big green candle, and it hit the POC and SFP'd the doji candle, and then I shorted, and I made a bit of profit, set break even, and then I got stopped out, and it started pumping up.
This one here.
I
honestly thought that was going to go down when you showed me that. I thought that's
you were looking at it and you said you've got hammers.
You got hammers.
But there was so much. Shall I show you? Shall I present?
Yeah.
Just get the right screen up. Is that big enough to see?
Yeah. Okay. Get rid of the that stuff. Yeah.
All right. Let's make it a little smaller. Is that better?
Yeah.
Let's get rid of this as well. So this was your diamond pattern.
Yeah.
Right. And I wasn't using the golden pocket from here to here originally. I had it from this high to here.
Exactly.
So the confluence was really good here at this point.
Yeah.
And if I go down to like the 1 minute, because that's what I was really looking at. There, if you look at it here, so I saw this cluster and a slight SFP here. I took the short and I took some profit here. I actually did it again here, came down here, and then I saw this come up, SFP this level, and that's short I took. Well, I didn't take profit, and I just took my eyes off it for a minute, and then
you got stopped out.
I also actually took this long here. We came down here, and I was thinking these shorts are just not going anywhere. We had these other old exhaustion levels here. We also had the value area low here, and I thought, let me try longing it. And I think there was a 30-minute candle Yeah, let me just get that up. Just trying to remember, because I was using Mex and kind of half looking at this. Okay, this is what I did. I saw that this had SFP'd and I missed that move. So when it came down here and I saw these lows, it SFP'd these lows. So I went long to here, and that's when I closed it and I took the short. See that? Because we SFP'd this one. Took it down. I took a bit of profit when I set break even, and it just took me off. And I did this really dumb thing where I just preset a short above these highs.
Yeah.
Like I just fully positioned as well, because I thought I'd just catch it one more time and then it would dump.
Yeah.
Right. So it just went through it. And so I thought, oh crap. So if I held on, I deleted that golden pocket, I drew I pulled a fib from this high all the way down to this low here.
Yeah.
And I got this, and I saw that it was going up, but the momentum was so strong. If I show you the 1 minute, it was just like crazy strong. And my position was down here, and I was like underwater. But what I noticed was when it got to the golden pocket, it started to slow down here. But then this is where I thought people are going to short too early, and there's this extra pump. But I didn't short again. I didn't do anything like that. What I did was, when it came up, it started to drop. So when it came to here, I closed off some, taking a loss, right? Which didn't matter because I added the shorts back here.
Yeah.
See that?
Yeah.
And then it dropped down to here. And on Mex, you've got the 200 MA. Basically hit the 200 MA. And then I cashed some of it out here, set break even, took some more, another profit here. I'm just on my runner now with an entry up here.
That's really nice. So you made
It worked.
It worked.
I managed it.
You gotta be careful with these presets, like. And Daniel always said, never preset.
It works sometimes, but then sometimes it just messes you up.
It messes you, yeah.
So you can preset, but then you need to go lower. You need to have a bigger stop and a smaller position, and then take it. But it worked, you know. And the thing to look out for is this, right? You don't always have to enter to get the top. There's this little cluster formed here. It starts to break down. Then it comes up. And it back tests this area, and that's where you short. You don't have to short, keep catching the highs. Just wait for the back test. You want change of kind of structure, you know. Here's the change of structure. It kind of takes out that low there that made the high.
And it even came back again the second time.
And again. So there were so many opportunities to enter, and that was done just to short that. Because look how much. Look at that strong candle crossing through, back testing. What I should have done in hindsight is when it did that, I should just flipped and reversed my trade because my entry was there. Would have been break even, I would have caught all of that move.
Yeah.
Just giving up.
But you didn't have a plan for that. That's the problem.
No. So if I had this ribbon on, like you showed earlier, this is the 20 moving average, I think. It just sailed up it on the 1 minute. That's really bullish. That's too powerful. You shouldn't be trying to go against that. So yeah, I didn't have a plan for it. I think I just got too attached to this diamond. But what I did was I went on the higher time frame, and I saw that at that time, imagine this candle here, and this candle was like green all the way up here.
Yeah.
I was waiting for an SFP of this high.
Yeah, exactly.
It stopped short, and it was just like a flat top candle, and then slowly so it coming down. If I go on it stopped here. So I was thinking on the hour, oh, I'll short that. Then I thought, no, let me wait because we might get an SFP of this. But what it did was it just pumped up, and the SFP this hour candle, and then came down. So I noticed that happens after these people get in early, and then there's one more pump.
Give me a second,
when we're
David. I've
done.
got to answer the door. Just keep on describing your trade.
So let's see. Let's turn off everything. So you've got a range.
Trying to act as uninterested. All right, I'm back. Guess someone answered. Someone at that door. It says, "My name is Matthew. I'm an ex-prisoner." What am I gonna say? Not interested.
Ex-prisoner.
That's what he said. It's how he led by. God, some people. Why would you knock on someone random's door and say, "I'm an ex-prisoner"? Like, am I gonna? You want to scare me?
He's trying to show something.
Hey, knock, knock. I'm an ex-prisoner. Of course, I'm not going to open the door. I'm going to close the door. Sorry. All right. Back. So I told you I should have taken my laptop and streamed it. Well, oh look, that's a 3-day chart. That's an evening star doji in the highs. Look at that.
Oh, it's got 3 days, so
it's 3
still time
days.
to
But that's an evening star. Go back to it. If you're looking for a reversal pattern, that's what you're looking for. You're looking for what's the volume like? Can't see. There's no volume.
What's my volume?
Where's the volume? Give me some volume.
Oh, okay. Wait, let me just hide the drawings.
Right. Not really as high as you'd want.
Not really. I don't know.
You see, with the weekly, what I'm looking at is the weekly. So the weekly, I'm looking for some sort of SFP, and it hasn't happened yet.
No, so it's not clean, is it? The top.
Clean, no. That's what I'm looking for.
Something else I tend to do is I try and look at the tops or bottoms on a lower time frame, and I'll do things like I'll pull the volume just on this, and then I'm looking for like a selling tail.
I think this diamond is finished, by the way.
Yeah, I don't think it's a diamond anymore. There's a bit.
I think if this diamond was correct, I think the idea of the diamond to begin with was correct, but I would have expected a sell-off by now, and it hasn't really done it. Yeah, it has come in to test the neckline, but it
could just be bigger. It could just be a bigger.
But then if it's bigger, then you're going to make another high. If you look.
I think if it does all this stuff. If it's doing, just go over this. I think that's, we need to look at it differently now. Let's just look at this.
Yeah. I mean, it could be flagging as well. You know, you have to consider.
Could be, exactly. Could be a flag.
We're making lower highs. We're making lower lows. That's a poor low. That's a poor high. We have a poor high and poor low.
Where's the poor high? This one. That's good high, isn't it?
No, I think it's poor.
This.
Not that the whole structure.
Oh, you mean this whole structure is a poor high?
Yeah.
Okay. Yeah. I mean, look at it on here. Do we always have to sweep the top?
I mean, when you go back in the past, if you look back at the weekly history, and just go back to all of the swing highs on the weekly time frame, yeah.
Yes.
See,
no.
not that one.
That was poorly taken. That was good.
That was good.
And it kind of went down.
Every time it turns and goes down,
So
Go
what
back
about
up.
this one? This made it,
But
and then
that
this
turns
one.
and goes up. Go look at the ones where it turns and goes down.
That one,
That one.
SFP.
Yeah.
That's a good one.
What about the one before it? SFP.
And that one.
Yeah. The next one. No, it doesn't go back that far. The next one. That
Yeah.
one sweeps. Yep. Go next one. Doesn't sweep. Yeah.
No, this one did. Look, see that?
It sweeps the little range, yeah, and then it goes down.
Yeah.
I'm expecting something like that, but this one doesn't. You see where? Go back a bit. Go back. Go to your left. There, to your right a little bit.
Or this one. Or that one.
They both do.
Yeah, there is a sweep. Yeah,
Yeah.
It's too soon to do this one.
Yeah, it's too soon.
This was poor and it got taken. But what about Elliott Wave? One,
I
two,
said it's already on the 5, huh?
5. Yeah, you said.
Go to the daily. Let me show you my.
And that's like a 1-to-1 already.
Let me show you.
Yeah, you can represent.
Yeah, I'm streaming. No worries. You can join. There's my nephew who's coming in and saying, "Are you still streaming?" Yeah, I'm streaming. I was looking at the stream yesterday and I think I moved the chart around too fast, too quickly, so I need to kind of go a little bit smoother, because I was finding it hard to follow myself, so I'm going to try and be a little bit smoother. 1, 2, 3, 4, 5. That's what I'm visualizing right now. And if this is a 5 wave up, then this would be the wave 1. So I'm imagining that this is going to stop somewhere soon and reverse, and then this is going to form a 2 all the way. So in my mind I've got this. These are the bull run timings. So you've got the Bitcoin bull run beginning somewhere at the end of April, ending somewhere at the end of September, beginning of October 25. So somewhere in between that period, I'll be expecting a 3 and a 4 and a 5, with the 2 possibly happening somewhere by the end of December through all the way to March. And then what I was thinking is, this is quite a long one. See that? That's a pretty long one, huh? So I don't know if the 3 is going to be as long as the 1, which means the 5 is going to be the shortest one. And if the 5 is shorter, then it doesn't even have to go higher. It could go lower. Do you know what I mean? The only condition here now is that the 4 stays above the top of the 1, wherever the 1 is. So as long as you follow these rules, then this 5, if the 5 is the shortest, then the 5 could be anything. It could be like that. You could be looking at a higher time frame, head and shoulders, to form a 5 wave Elliott, with 3 being the short, the middle, 1 being the longest. But I think even if 1 is the longest, and if this comes back and it backtests this all-time high, this previous, so that would be the best case scenario for the bulls, a consolidation above this level here. That's the previous all-time high. So if we consolidate somewhere above here, all the way through to the beginning of the Bitcoin halving, then that's going to be your most bullish scenario. And obviously the 3, I've put the 3 shorter, but in the world of crypto, The 3 could be longer. You just don't know how long it can be, you know. Usually the 3 is longer, but because I'm looking at a really long one, then I'm imagining a slightly shorter 3, and then also if the 5, because I did all of this on the other stream. I've got these extensions, and I've got this. I had this going higher, but if it turns now, then it's not going as high as I had. I thought this maybe could go up higher, but if it doesn't, and it's just kind of turning around now somewhere arbitrarily. Could it be the 3 point? Could it be there? The 3.272? See, it looks correct. See, look at that.
Yeah.
That's where we're finding resistance right now, at the 3.272 extension of this trend base extension from this low to this high to this low. That's a pretty extended move all the way up to the 3.272. This would work. Now, when you compare this with the fib extension, then you've got this TR pocket, and then you've got this 1.618. I don't know, maybe the 3 doesn't go as high, maybe it goes up to here. And then you get something like this. Because even from where we are now, which is $30 to 170, 180, 70, it's quite a lot. But I remember that Solana, in the last bull market, it pushed up all the way up to like $300. It just got really, it just went really crazy. Then you had this drop, and then you had another push up. So this, a lot of people are saying that this is kind of following Solana in the last bull run. It's something to consider. And then when I was looking at comparing it with the BTC chart, I was looking at this and I was going, wait a minute. I think the BTC one is the one that you trade for entries, and we're extended over the previous all-time high. That's the previous all-time high. Consolidated underneath. We took it and we closed underneath it. We consolidated underneath it. We were above this high here. We didn't get close. We almost came and back tested it, and then we pushed up. I think as long as the price can consolidate above this previous all-time high on Bitcoin, I don't know how it would do it, then somewhere here would be a good entry on this. I like this channel that I drew, and I explained why I drew all of these out on that live stream that I did over the weekend, and I drew out this channel, and I think this is quite nice. So I don't actually want to see us lose this Bitcoin, this INJ Bitcoin channel. You see that? So I like here where we lost it, and as soon as we closed over it, it shot up, and then it came and perfectly back tested it to continue. I like that. And then this consolidation range came into it to continue. And then also we've got this other kind of channel that's going on, which is from the launch price to these lows to the first all-time high in the last bull market. And so this red channel is another channel that we're kind of following as well. So we're kind of in two higher time frame channels, and obviously I was thinking that maybe this could potentially still go up and test the top side before coming down. But you know, crypto, it does what it wants. You can't preempt it. You just have to trade it, and as it's happening. And so your diamond idea on Bitcoin is following as well. Was following initially, but now it's kind of forming some kind of different pattern. Let's have a look. See, this was the diamond idea. Close that again. I think I actually must have deleted that. Initially, this was more respected. Like that. That was a break. So we're above that line now. See? There, break, back test. We're above support at the moment. And this POC was lower initially. Where is it now? Oh, it's in the middle now. And look, that POC is perfectly acting out as a flip almost. Look, that was a back test there. Lower low, higher high. This is the lower low, lower high, lower low, higher high. See that? So actually this is telling us there's something else. That was the higher high, this was the lower low, lower high, lower low, lower high, lower low, higher high, higher low, higher high, higher low. I think we're in bullish market structure on this. We've changed it on the lower time frame. Back to bullish. Which fits into my idea that actually we might sweep the highs again. So I think this diamond has been invalidated, because there's no way that you want this to go back above that, the outside of that diamond, and make another high. You see that? You see this high? If this diamond was correct, this should have come up once, maybe a back test, and then dropped down, and that would have completed the pattern. That's a diamond pattern. And it's completely been invalidated because it's gone back into the value area, and now it's taken out that high. There's no way the diamond pattern should do that, and it's also above this trend line here. That's not a diamond pattern anymore. That's an invalidated diamond pattern. So I think if anyone's trading still hoping for this diamond pattern, they should just delete it now, because it's finished, right? So what you could have traded it, but you had to take profit. You wouldn't have got your full profit, but if you traded it with the correct risk management, you wouldn't have taken a loss more than the profit you took. That's how you trade. Now we're looking at something completely different, and actually it is a flag right now. At the moment, it's a channel. And this is the Bitcoin chart. This isn't the USDT chart. Okay, messages. See that? See that channel? Let me change it to a different color so everyone can see it. And green doesn't work. Obviously, I don't know why green isn't working. Go to red. Well, red doesn't work either, so never mind. I think I need to restart my trading view. See, that's looking like a flag, huh? A little bit of a flag.
Yeah. It is.
you've got a lot of selling tails in the top of this range. With decreasing volume. I think we're just ranging, you know, like I don't see any moves right now. I think we're just literally in a range. Obviously this when you compare it to the lower time frame, let me lock them. Do you have the same kind of idea on the USDT chart? Let me have a look.
Yeah, probably, because it just mirrors it.
It looks like it's mirroring at the moment. When the USDT and the BTC chart mirrors, that's quite.
Actually, no, it looks different. It's different.
Slightly different. I think the BTC one is more technically correct than the USDT chart. Personally, it looks like the USDT chart. Look, you see here we don't take the high. You see here we don't take the high, and here we take the high. I think this is correct. I think this should have taken the high and it didn't. This is overextended and come underneath this channel. This is perfectly respected the channel. These bottom lows are in perfect perfect alignment. This is a bit jagged. I think the thing, what you're getting with the USDT chart, people who are trading BTC are technically trading correctly according to these patterns and to these channels and to these levels. The people on USDT are basically panicking. So either they're panic selling or they're panic buying, and there's a lot of fear going on and greed going on in this chart. Whereas here, I think there's a lot of very astute technical traders, and so that's why they're looking slightly differently. And maybe also the leverage is playing on a lot in this USDT. Whereas obviously when you're trading with Bitcoin, you're not leveraging, it's just straight swaps. So it might be less overextended and more technically correct. But this is a nice downward channel, which could be a flag. And if we draw this range here, I definitely need to restart my trading view. All right. See, here we're underneath the point of control. Here we're above the point of control. So there's a little bit of divergence in what the two charts are saying. I can't see anything on the indicators. Let me go to the higher time frame. No, they're just kind of doing the same thing, except that the BTC, that green candle, was much more extended than this one. Yeah, they are doing the same thing though. There's nothing really to report. There's no real trades here. I think the trades is basically trading the range, and so you have this channel now, and actually what seems to be happening is that we're sweeping the lows and we're going back up. We keep on doing that. So, or sweeping the highs and coming back down. So if you want to trade this, just look for, I mean, what would be great is if you could SFP this line and these two at the same time. Yeah. So if the price goes up, SFPs at exactly the same time. You could just do that at the same time. You could short this. If you go above the channel and then lose the channel, and then you can come right back down. That would be nice. And then you'd be looking to take profit somewhere at the range low, somewhere in the midpoint of that channel. If you could get a perfect synchronization between these two charts at the same time, doing the same thing, so there's no divergence, And so you're basically taking the liquidity from these highs, coming back underneath the high, then you can short with confidence, and then you have an invalidation as well. That would be the safest way to trade this right now. And then obviously what you want to do is, as soon as you're kind of the problem is this: it doesn't have to, it could find support on the top of this channel and then go back up. That's the problem, because it's still quite bullish on the higher time frame, on the medium to high time frame. It's still quite bullish, and so you have people that they're going to trade the breakout, and they're not going to care about SFPs. They're just going to go breakout, buy $1 million worth of INJ. That's how these people think, and that's quite dangerous, because if you're taking a short, it could go down, you get stopped out, and it'll still go down, you know. But instead, actually, it's taking that high, this higher high. Yeah, you get that bam. You see what I'm saying? So actually, the best short is obviously going to be the highest one. Obviously going to be the highest one. Without a shadow of a doubt, if you could short that, SFP on that one, that would be amazing. Take that short. Definitely take that short. Take profit back at this value area high somewhere. That would be your first take profit. That would be amazing, actually. I would love to see that. Take these highs, come back to test the top of this channel. All of the breakout traders are going to go to the moon. You get a nice pump up, and then you actually short the all-time high as it comes back down. And if they both synchronize at the same time, and then when you come back to the value area high, you take your profit and then see what happens. That's the trade. I prefer that trade. Then the other safe trade for me, because the danger of these breakout traders who have a lot of money because they've made a lot of money, and they want to pump it to the moon. You've got to be careful of those kinds of traders. It would be a lot safer to take the SFP and to come back into this channel and come back into this value area. Obviously this one's not exactly the same as this position, but it'd be a lot safer to come back into the value area and then short that. On this one it would be the value area and the channel, then you'd be shorting there. Then you have a small invalidation, you're back in the value area. You don't have a worry about these breakout traders, and then you can just trade it back down to the value area low. It's not a big move, like 5%. And actually it could your actual target would be these lows down here, because that's what you're trying to do. You're trying to continue this flag a little bit, and this would be like a deviation. And obviously if you were to short the first SFP, that might be just as fine, but you're going to have to take profit really quickly, because like I said, it could come back into the top of this channel here, and you're going to get a breakout trader who's going to go in with like crazy amounts of money and just try and push it up. And the thing about those kinds of people is, yeah, they'll push it up. What they're actually trying to do is they're trying to push the price up. They're long here, and it's up 8% to the all-time high, and for them that's a good money. So they'll like come in with like $1 million or something stupid. All of the people who have shorted here get stopped out. All of the people who have invalidations up here get stopped out, and this breakout trader is not trading for the moon. They're just trading for that 7%. And once it gets to this place, they take most of their profit out. They'll walk away with like 7%. And they'll leave a really small runner in there, and they'll just mark it out where everyone is marketing long because of their stops. Their stops are being triggered, and they market longing. So there's a lot of liquidity in these two places eventually when these shorts come in, and when they put their validations up here, that's where the most of the liquidity is. And these people are not trying to long this to get to $70. These people are just trying to capture the difference between this position here up to there, and that's a payday for them.
Yeah.
And so you have to be careful, because then you're gonna get the retail or whoever's looking at this and go, oh look, new all-time high, let's long, and they get destroyed because the people who have actually longed here are now taking their profit up here, all of their profit up here. We're leaving a really small position, and it just pulls the price right back down. And so whoever longs the breakout at the top gets destroyed. So actually, the safest short right now is definitely going to be this previous all-time high, and it has to be an SFP. So you would never short it if the price just kept on going. You want to see the price go up and come back down underneath that level, then you can short it. You have to take profit at the value area high. For exactly the same reason, you could get another person, another million, bam, just keep on longing this area until it goes up. Yeah, just wrecking all the shorts. So that's kind of what I'm thinking. What do you think?
There's lots to take in.
All right, so just break it down simply. Long, I'm short the SFP of the all-time high. Or if we come up and come back into this channel and it's doing the same thing on both of these charts, you can short that too.
Okay. Yeah, I like that. I like the SFP. I think SFPs just, especially those highs, those daily ones, like just, only take it if it goes over, comes under the lower time frame, look for some sort of break, retest, then enter. Don't just, because it could just go through it. I think it's very unpredictable with this thing. It's very unpredictable.
Yeah, you have to expect unpredictability. You can't, like, even though now, like, David and I, we're doing technical analysis, we could be completely wrong. Like, something else could happen. Who knows? It could crash, it could go up, it could continue going sideways for the next 2 weeks. Like, you just have to, you have your trading idea, you have really tight risk management, which is basically 1% of your portfolio or your trade, or if you want to, even if you reduce that to 0.5%, that's a safe, that would be safe as well. You could do half at the top and half lower down, just in case you were wrong. You're still winning if you short 0.5%. If you were to short 0.5% up here and it was going down and it came underneath this low and you took another 0.5%, you'd have an average somewhere here. But at least you know now the price is going down and your idea was correct, rather than doing 0.5% there and it just goes up and you lose your whole 1%. So it's a way of managing your risk. But the key to all of this is taking profit, and you have to take enough profit so that when you get stopped out, you don't lose. You're still winning. That's the rule. There's no other way of doing it. That I've listened to so many people, and there's no other way of doing it. I think we're good with it, INJ, right?
Yeah, I think we're good.
All right, let's have a look at. So yesterday I did a full analysis on Propbase, like a proper analysis, and you can go and watch the video if you've got unbelievable amounts of time on your hands. But if you don't, I'll give you the update. There's this GAN. If you draw it from the launch price to the all-time high.
Okay.
I'll go on a lower time frame. if you do these, if you draw these TAs on these things on the lower time frames, they're more accurate. So you go to like the 4-hour chart and draw it more accurate. So yesterday I was kind of I was just thinking to myself, let me just lock it as well because I hate it when it moves. I didn't like this yesterday. I didn't like the price came back underneath into this range, underneath this scan. So I was out. Yeah, I was stopped out. And then the price pumped, which always happens. I didn't jump back in. Okay, I didn't think that this was strength. So for everyone that was watching yesterday, I had a position in this. I wasn't really looking for us to lose this level and come back into this range. And as soon as it did that, as soon as it came back up to test, I was out. I just sold it. And lo and behold, and also the other thing I did is I was looking at the orders on MEX, and I saw there was a lot of sales above us, a lot of sell orders, and that gave me a little bit more confidence to sell. And then obviously the price was brought up, and it went up higher. And I wasn't tempted. You're always tempted to jump back in, but I wasn't really tempted. The indication for this to go up, I'll show you. I was looking at it again. I was analysing it again yesterday, thinking to myself, you should always do this. How could I have improved my trade? Well, look, this is the value area from before. After we lost the GAN and after we got back into the value area, someone had basically come in and long to the point of control here. Yeah. You had like volume coming into this value area, into this POC, and it was being brought up. It was teetering up. And then once it got back up and it found acceptance above this value area, someone just longed. See that big green candle? Bam. So someone was waiting to buy this. They were waiting for an entry. And the reason why they were looking to enter was because of that news. So they were looking to accumulate a whole bunch of this, of prop. And for them, they were waiting for some kind of bullish reversal. And look, 1.25 million. That's quite a lot. 1.25 million is about $20,000 worth in a market buy. Yeah, that's quite a lot to market buy that on a liquid asset. It went up, couldn't make a new high, got rejected off this value area high, and then it just started to make its way down. And then obviously it's lost this scan. You see how it lost it? Back test. So someone, you see that high volume red? Someone just sold that. Once it lost it, they just sold. It came to fill the gap, back test again, and then the rest is just weakness, right? So the idea of losing that GAN the first time was absolutely correct. We were right. We were also right for not jumping in, for thinking that this one candle was strength. Yeah, you've got to be very careful about, this is just one person trying to get a position and they have no patience. That's what this candle represents. They have literally no patience. Yeah. That the news is hit, they're looking to get into this asset, they're FOMOing in, they're not looking for lower, they just want to buy it as quickly as possible, but they're waiting for some kind of, in their mind, some kind of reversal, right? And so what they really, if this person didn't buy this candle, wouldn't have printed, this probably would have just gone down like that anyway. Yeah. And then all of that volume would have been reserved for lower down. Yeah, he could have bought it much lower down. 14%, you know, look, down 25%. But that just shows you impatience, because that wasn't the right place to buy. if you wanted to buy this, what you needed to see was for this to go up without your, on its own, back test these lows, and then you could probably buy here. So timing is also quite important. You needed to see acceptance here, come back onto this, then that's when that volume, this volume should have come in here. That would have made sense. So instead of it coming here, it should have been here, right? And what would have been even better, whoever was doing this, because obviously they just want to get in, is they could have scaled in their buy. Rather than buying all at once, they could have scaled it in. They could have scaled in 1 million Propbase, Prop S over about 12 hours, and they could have got an average position rather than just getting a massive position and then finding themselves underwater. And we don't even know, this guy, this red candle might be this guy. Yeah, look, he's bought up to here. It's underneath his original position. That could have been he could have just sold it out of frustration, thinking that this is going to go to the moon, and actually it's reversed. And it could be, look at that volume. It's an increasing volume on that red candle. Someone's market sold, but there's no liquidity, and it's just gone all the way down to 19.54. But my idea was correct, and we exited it. And actually, we exited, and if we were to buy back now, we're buying back lower. But what's actually happening with the whole of this chart is basically following. It seems to be following what my idea of a head and shoulders pattern. We've clearly failed to take a new all-time high. Clearly, that's a clear failure of taking the all-time high, right? There might be a second attempt. We have to see, but that's a pretty ugly sell, huh? Look at that.
Yeah, it's quite bad.
It's not what you want to see. So I would like to see now the price to work its way back down to this GAN fan, because obviously you can see the GANs are working, huh? You can see the GANs are holding the price, or in some way that they're controlling the price. Whether it comes under and it goes up, or whether it comes to it, goes back up, I wouldn't be surprised if somehow, however this gets here, the GAN, I mean, if it dumps, it might do this, you know, and then continue down. And my original idea was that, let me have a look. We're in this this higher time frame channel, and we've taken it from the all-time high to the previous all-time high to, on the 4-hour chart, to the don't really know exactly which one, maybe that one, that candle close. And you see that midpoint worked, that back tested, I mean that resistance over, and now it came back. So we're looking at head and shoulders. Everyone's now seeing this actually, so they're going to get more bearish, and what's going to happen is that you're going to get more bearishness down here. You should get a lot of volume here, because now people are like, damn, this is a head and shoulders, it's going down. Like, they preempt it. Rather than see it up here, they're seeing it down here. In terms of candles, well, that was a nice weekly candle. Look at that, closed higher. But Why is that not bullish, David?
Which one?
This green candle that closed above the previous week high.
Why is it not bullish?
Look, it's closed above that one.
I mean, I did think it looked quite bullish when I saw it, but also
Closed above this one.
Hasn't actually got to. I mean, it could be bullish, and it looks like a bit of a poor high. So I'm still semi bullish on this. I think this is a nice pullback. That's what I was doing when you told me about that GAN, because I had a similar thing with the fib channel, and it was stuck under a level, and so I closed it up, and then it did pump up, and I thought it's okay. And then I looked at the weekly and the 3-day, and I was just looking for some levels, and I just added some orders on lower down. I think I'll go on weekly. Yeah, I think I tried to buy on some of those weekly levels, the lower one. That's roughly where I was trying to buy in to see if I could snipe some sort of entry. Because I still think, I don't think it's, because it is engulfing the last candle.
Yeah, that's a bullish candle. That's a bullish candle.
So I don't think this is done. I think there's potential.
Well, you have liquidity here. That's your weekly level. If you're going to long this, that's where you long, right? 17798. So anyone who's interested in longing this is where you do it. That's where you set your orders. That's the lowest risk right now. And then if you really want to minimize your risk, like truly want to minimize your risk, it would be down here, and that would be a swing failure. Most of the liquidity is going to be somewhere between that weekly level in these wicks, basically. That's where all the liquidity is. What does that look like on the lower time frame?
Shall I show you my fib channel?
Oh yeah, you have one, yeah?
Yeah.
Go on. I could have gone to your chart and had a look at it.
Yeah, do that if you want.
Alright, let me share again. You can actually, you don't need to present. We could just do it the way we do it before. You could just draw on your own channel.
Yeah.
David and I reshare a TradingView because TradingView is really too expensive, and what it means is that
it's not just that. It's just that we then we can see exactly what we're doing.
Well, yeah, that was the real reason.
That's the main reason.
That was my alert. Oh, I've gone to your.
Yeah, go on the list. You can go on your list because it's easier to find. It's there, just there. But if you go on your list, then you'll find it easier. We just got different order of stuff. So.
So you've gone to the. Let me go to the.
Yeah. So what I did was, do you see the volume pulls? I split that movement into like two moves, and for it going up and then that going down, and I saw that there was a POC at the bottom, and you can see the way I've done a FUD channel. It's from a similar channel. I've got a shift there as well. I've just copied it, but I put a fib channel over it. I mean, the price is going sideways, but it is sort of reacting to it. It's hard to be sure. I really want it to go up and move up these levels. Otherwise, it's just going to go sideways and invalidate that.
Well, what would be even worse? And I love this channel, especially this. Look, this 236 is on is holding as resistance. This 382 is holding as resistance. Basically, once it's flipped from support into resistance, the 5 isn't really a fib. The 618 that holds as resistance. The 786 holds as resistance. I think once we lose this channel, it's going to be our resistance, and it might go up a bit, and then but eventually it's going to drop, and that's what we're looking for. So, could you long this channel? No, because you could long it, but actually you're losing levels.
Yeah, exactly.
Every single channel line is being lost.
I mean, I did long the bottom, but that's right at the bottom. You really have to long when it gains a channel, and it hasn't gained any. It's not gaining any now.
The only ones that it did was this 5, but that's not fib. That's not a fib.
Yeah, and that's actually when you did your first long. Yeah. It broke up, and then we should have taken profit, you know.
Yeah, I mean, I was looking for higher, and I was a bit more I was more bullish, and then we walked away with profit eventually, but that's the problem when you're biased. I knew that December was going to be there's going to be a lot of news. I thought maybe it'd be more bullish, but what's actually happening now is that a lot of people who are invested from these lows, all of this is their take profit. It's almost a distribution, what we're experiencing now, but it's also an accumulation. It's a reaccumulation. It's a distribution plus reaccumulation, right? So you have a lot of people who entered in on the token launch at low prices, and they're already like, look, if you had $100,000 at the token launch, you're right now you're 14x on your initial investment. You've got $1.4 million in your, and you have to. The thing is, this is very illiquid. There's not much liquidity. You can't sell all of that in one go. So what the people do is, in order to try and exit at the best price as possible without crashing the price, is every time there's a pump, they kind of scale out. It's not that they're scaling out. They're scaling out. They're scaling out, scaling out, scaling out, scaling out, scaling out. That's what's happening, and you're forming this kind of these fib line, losing these levels, and they always time it against news. They always time it against bullish news. Yeah, it's bullish. I'm bullish. I'm really bullish on this. I think this could probably 100x in the context of a 1.5 year Bitcoin bull run. It could. Why not? It's a very low small market cap token. It has a very kind of it has a use case which has been unexplored in crypto, which is the tokenization of assets, and it's a new market. It's empty space effectively, and they're pioneering this new kind of market. So there's a lot of room for growth. It's basically like the Wild West. Land is opening up, and people can just go there and stake their territory, and it's all free. So a lot of people are moving into this new Wild West. But the thing is, if you're entering now with a really big position, and this corrects down to here, you're 72% down on your investment. That's the problem, right? Let me draw this fan on my own now that I've got it. Hold on. Keeps on going back to travel. Propbase. So even though this is a distribution, this is also an accumulation. Yeah. So the question is, who's distributing? Obviously, the people who've got massive profits at the lows. Who's accumulating? Maybe the same people. Maybe the same people are buying the lows as well. These people are selling the highs. Maybe the same people are buying the lows. But at the moment, the volume is pretty low, and I wouldn't expect this volume to inject until April. That's when people are going to be really bullish and start just buying stuff up willy-nilly. So actually, I think the best place to enter here will be down here on this lower channel. Let me draw that fib. Where did you have it? Up here to down here. Oh my god, what have I done?
No,
Who's up here to up here?
no, you start from the low.
Like that?
Yeah, kinda.
That's different.
No, it's not. You have to. You see that low? The low here. I can't draw it on your chart.
Here?
Yeah, down to the beginning of the price action. Yeah, and then to the high, first all-time high.
To there, yeah?
Yeah, that point. No, up, and then pull it to the all-time high.
To that one?
I think so, yeah. Yeah, but you have to do it the opposite way of doing that. Yeah. So do it from the beginning, not the very beginning, but you know that low that we found before, just after, yeah, down there to the left.
This one?
Yeah, start there, then go to that one, and then pull it up to the all-time high, the first all-time high. Yeah, that one. That's how I did it.
Oh, I don't like these colours.
Go for rainbow.
I don't like that either.
Rainbow mode.
Extend right. Get rid of the background. There we go, that's better. Maybe fade the colours a bit. It's a bit too... I have to do them manually.
Make it dashed or something, because it's a bit bold, isn't it?
Oh my god, this is all ugly. That's a bit better. Oh look, we just came into that. How do you, if we line this up with the GAN, what are we looking at? I actually prefer your fib channel to my GAN.
I think there's too much space in the GAN, so it's kind of hard to see what's going to happen next. There's a lot of...
Have you tried to... Have you tried to do that?
Yeah, I mean, it can. I think it has to join up, doesn't it, ever to the right at the bottom? So you can't always do that because they're different. They're different percentages.
Yeah.
You're trying to mirror it, aren't you?
Yeah, I was just thinking of how to, like...
There's a nice bounce on that one on the 0 line, so I do like that.
Yeah,
it's quite a strong bounce.
Yeah.
So you just have to see what it does now. If it climbs back up. Or...
It just looks like it's we're losing levels, like non-stop. Every single line is like, you don't really want to see it drop. You just, like here when I was really bullish on this, I didn't really want to. I wanted this to continue and just start taking levels and, you know, just going for the moon. You know, that's kind of what you want. And look, I've got my 1.68 marked out. That's what I was looking to take profit there. I think this is going down. I think we're going down. It's looking like a head and shoulders. Where would you enter on this?
Hard to say. I mean,
well,
I was just looking at the whole thing as a range. So if you pull the range,
well, look on the. This is the monthly chart. Yeah. Let me just close these. Brush and get rid of all of that so everyone can see the candle. That's boring. That's fine. So in terms of candles, you had a strong monthly launch. No profit was taken in November. That's what that means. Yeah, small wick. No profit was taken. This is a profit take candle. That's what we're experiencing right now. We're
just gonna get a hot drink. Carry on, yeah. I'm listening.
We're experiencing TP, take profit. A lot of people who are in the launch are. This is the distribution. Okay, that's what we're experiencing. So when you're just looking at the candles, it's like a rising wedge actually, isn't it? A little bit of a rising wedge. Or is it a flat top triangle? Is that a flat top triangle? Or is it a head and shoulders? We're kind of experiencing one of many things right now. When you're just looking at this pattern, this is a reversal. You see this expansion, this kind of doji into the highs, take the liquidity from the previous day, and then you sell off with a wick underneath. That's a market sell. This whole pattern is a reversal. Confirmation of this reversal is a daily close underneath this wick here. You get a daily close underneath this wick here, and I think this is a really bearish looking pattern. Yeah. If this holds, yeah, sure, we could go up, we could continue. Or maybe we could just reverse this candle, a nice big green reversal, and then it will just continue going up then, because that would be really bullish. Because you haven't had a reversal, you've basically had a bear trap. Yeah. So how this daily candle closes is quite important. And actually, I wouldn't just buy that candle if that closed above this wick. It's obviously taken the liquidity from the low of this wick. If this candle closes above this wick, you could buy it, but the next candle wouldn't necessarily be a full reversal expansion. It'd probably be green, but it might be a doji. There's going to be some sort of take profit halfway up. Yeah, and then you have to see how this next candle forms and how it closes. If this closes above this wick, the next one will be bought up immediately, and then people will start taking profit as the price goes up. How it closes is important. If it closes again above this line, that's like, you could probably buy that to go up then. The next one you can buy to go up. And that's like this level is held as support. It's come back tested, it's held, and then you could get like a doji there, and then a reversal, like a reversal candle there. And then as long as you're closing above the previous doji high, then this could continue to go up. Yeah, that's kind of what you're looking for in terms of the way the candles form. But right now we're experiencing a reversal, and as long as this candle closes underneath this previous day low, which it at the moment is, it's trading underneath it, then you would expect the next day, if it closes, if this was just to close here where we are now, you would expect a little back test and another further continuation. Yeah, of that. This is not pretty. This is pretty ugly for the bulls. For the bears, it's perfect, but for the bulls, it's pretty ugly. Yeah. If it closes lower down, that would be better, because you'd still be going up trying to get a back test. So then you could buy it and try and get a back test. If it closes underneath this, then it's looking really bad. And depending on how bearish.
This is what you have to do sometimes. Go look at the candles and come up with an idea, because sometimes with these drawings, like channels and fib channels and whatever, GANs, it builds a picture. You go, oh, it's lining up here, it's lining up there, and then you believe it. But it hasn't fully formed yet, because that fib channel is based off something that didn't exist. Do you know what I mean? I pulled it on. It took time. Like, a lot of it lined up, but a lot of it didn't actually exist at the time. Like, that low that I put on there didn't exist. So you can't always, just believe these things. Just because it lines up doesn't mean that it's true. Could just be coincidence as well. I think you look at the candles and see where the closes are happening. Because it tells you a bit more.
The candles tell you a lot, yeah. Like, look, when you're looking at this reversal here, and it's also good to look at previous patterns of the same asset to see how it behaved previously, because usually it repeats. So you see this, you have this green candle, this push up. This is like a doji, take the liquidity. we have the same thing here. This is in reverse, but it's the same thing. And then you have a sell-off, yeah. And
Yeah.
how this continued before may happen. It may continue again. So you see, it closed underneath that level, and it came back to test it. So it's very highly likely for continuation. However this closes, it doesn't really matter where this candle closes, that it will come back to test that line, that level. Yeah, because it's done it before on a reversal. Now here it didn't do it because of the way this candle closed, but it tried to test other levels, but it was so bearish, and obviously the whole thing reversed. And then what you ended up with was for it to reverse again. It was like a double reversal, and then it came to test this level before it went up. And you, at the moment, what we're experiencing is something similar to this area here. The only difference is this is happening at the highs, whereas this was a continuation. So that is a difference. This high reversal mimicked these two high. This high here mimicked this one here. It was very similar because you had an expansion into the all-time high and then an immediate sell-off. You see, it was an expansion into the all-time high and immediate sell-off. Expansion into the all-time high, immediate sell-off. This one was a back test. This was a back test too, but it was a bearish back test. Then you had the continuation, then you had a continuation. So obviously this pattern is a lot more bearish than here, because obviously this first part was the launch, and so people weren't bearish. Now you've made a second all-time high. You've lost the level, you've lost the all-time high. That's the all-time high, you've lost it. The price came to try and backtest it twice, failed, and it continued down. That's what's happening. And right now what's happened is now the price has come up, you try and backtest that high, and it's failed again. It's look at that. It closed above it, but it just, the volume isn't enough. You need more volume, and I think that's part of the problem right now. So it's a bit of a trap for the bulls. So let's see what's happening at the lowest time frame. Well, look, you've got a little bit of reversal here. Why do you have a little bit of reversal here? Is this bullish? No. What you're experiencing here is the volume gaps being filled. And so when you're zooming in, this big market sell here. If you do a volume pull just on this area, I don't think you can see it. Maybe if I make the candles hollow, you can. No, because it's a red candle. Might make it into bars. So when you do a volume pull, you can just about see that this whole section here, there's no volume. You can see here, from here to here, there's absolutely no volume. There is no orders, and so the price has basically slipped down. And then now what the price is trying to do is trying to fill this gap. And usually what happens is it fills the gap here, and then it continues what it was doing originally. That's usually what happens. And I think what we're experiencing now is a volume gap trying to be filled. I don't think this is a bullish reversal right now. And then when you looking at these like lower time frames, how do you know if this is a bullish reversal? Well, in the first instance, this 2-hour candle needs to be fully reversed. You want the volume of that, you want to close above this candle. And if you look at the 4-hour chart, Yeah, I mean, you want the next 4-hour candle to be above that, to close above that candle. You want that candle to be fully reversed. That's the first indication of a reversal. And on the 1-hour chart, it's not candles, it's patterns. So for me to be like, start getting bullish again, you've got this low here. You've got this trend line here. You've got this high here. I wouldn't mind these candles to go up here, and then I could be looking to buy back here to go up. I want this close. I want to close above that candle. That would make me bullish. I close above that candle, and then okay, so you're not buying lower down with better prices, but you are buying with a into the trend, which is a reversal of going up. Otherwise, what we're experiencing right now could be just a continued downtrend. So if you were to mark out the volume, you're into the value area low, you'll probably get more. See, this is what I'm saying. You want to close above the value area high, and then you can start buying. So you could buy down the value area low. Let's just say this whole thing is a range. Sure, you could try and buy down here again, but you'd have to sell here. And I think that's the problem. Like, that's what we were saying before with Grok. People are buying hoping for the moon, and the reason why they're buying hoping for the moon is because of this, of that. So they kind of bought in here when the token launched, and that's a 3x, that's a 5x, that's a 4x. And in their mind now they're thinking to themselves, every long is going to be a 5x or 4x or a 3x. That's what they're thinking. So their bias has been established by the way this price has gone up. And every asset, it's quite deceptive. So when you go to Grok, oh Grok, God.
Keeps going lower.
Oh,
Always look at the channel.
Look at the Grok. A shit coin, a purely shit coin, the most useless of coins, a meme. And look, when it launched, it went down, and then some volume came in at these lows here, and it took it up 20x, up to 25x at the all-time high. So now everyone who's jumped, and we jumped, I jumped in, we jumped in together, and we made a 2x. I'm happy with 2x. I'm not greedy. 2x is good. But then we weren't looking for more. we took profit, and it went higher, but we weren't like, okay, let's jump back in because this is going to go to the moon. We realized that it was overextending, and you know, you can see Elliott waves. Look, 1, 2, 3, 4, 5. Look, we can see that's an extent. That's a 5-wave Elliott wave. We even drew it out. If that's a 5 wave on the wave 1, and then we're looking at a pretty extended, prolonged wave 2. And now what's happened is we are underneath the value area. Hello. So the first sign of strength, and we've obviously lost all these lines. Delete them. We are in this like channel. We are underneath the value area low. I think this is what I'll be looking for, David.
Yeah.
Just looking at this now quickly. I want to reclaim this line. It's very rough. Don't really know where it goes from to, something like that. It's more of an area. I think I want to see that reclaimed for sure. I don't like that we've kind of dropped underneath it, back tested it, and now we're lower. And I think as a sign of strength, However this gets back up, I want to see us back up over that line. And then once we're back up, I don't want to lose it again. Do you know what I mean?
Yeah.
And I think this could be quite prolonged. And actually, let me tell you something. Not working, huh? Let me refresh it. Let me try and refresh the whole thing. Goes back to travel all the time. It knows that I love travel. I went to prop. I'm so stupid. Grok. Oh, you have a monthly level there, huh? Oh, that's weekly. I wouldn't long this until the month closed now. And maybe I wouldn't long this at all. Not until I saw some strength. Because this is looking very weak. That's a poor high. Actually, it's not really a poor high. That's a clean high. Hold on. Let's see what else it is. This says weak. The only reason why it's weak is because there's an order block which has been formed and it hasn't gone back in to take. Yeah. But I like that it went and took that previous liquidity there. Obviously, I don't like the squareness of this structure here. And if this had gone up like that, if this wick had gone up, then I think that would have been what you wanted to see for a strong high, or even better, all the way up. It didn't happen. So that's why there's liquidity there. And so in the future, it could obviously go back up there just to take that liquidity. But at the moment, what we're experiencing is all of this liquidity being taken. So we have a weekly level just underneath us. But until you start seeing some strength, would you long this? That's the weekly level. This is where you want to long here.
I think we just need more time, more data. Like what you had before is you got an SFP, and then after that it was a back test, and then it was up. So what you need is a nice SFP like you had before. I wouldn't long anything right now.
This is the SFP you want to long, this one here.
Yeah, like that. Yeah. But it doesn't have to SFP that. It just has to form a range and kind of get stuck, and then SFP.
Where's my channel? There you go. So I originally had it going up, but it didn't do that. It just continued going down because we were going to short the all-time high. See that?
Yeah.
So it didn't do that. We're going to long that. That didn't work. Didn't take that anyway. Delete that. Delete that. But this ain't bad. I think that's still in play, David. This is still here, a bit lower down.
Yeah.
And it's any one of these intersections in this daily channel, this daily chart. either there or here. And obviously the biggest liquidity is going to be at the daily level here. Like literally, if you're going to long this, that's where you long. That's like the long of the century on this token. Right down here.
Yeah.
This is an SFP. So with this, you'd be SFPing. And you take profit as the price came back up into some resistance. And then you could probably lose it and come back into the golden pocket, because it could, I mean, this is assuming you get a dump, but it could go down SFP and then continue going down into the golden pocket. Do you see what I'm saying? It doesn't have to just go down like I've drawn like this. I'm just making this up. So I'll hide that for a second. Delete that. Yeah. And then high, low, high. I mean, we're still higher, low possibly. But this is what I'm saying. If you come down here now, and the other thing is we've lost this fib as well. Look. So the safest long is either lower down somewhere here into this overall range golden pocket, and then obviously you're in the value area low now. Higher high, higher low, higher high. We're looking for a higher low, according to this. Where's that channel? Yeah, that's wrong. The point of control is higher up now. See that? Point of control's moved up. The value area's moved up. The whole thing's moved up. That's bearish. Look, see that, David? That's moved up. That's moved down. That's moved up. This is bearish. When you have the value area move up and then the price is underneath the point of control, that's bearish. What you want to see is the value area move up, but you want to see the price trade above it.
Above it. Yeah, above it, yeah.
And it hasn't done that. It's moved up and now the price is trading under. So I think you lose this value area low, you're going to get really bearish. I think this has to hold now. This has to hold, and I wouldn't actually think about longing until we reclaim the point of control in this golden pocket area, like a proper sign of strength. And you're buying back in from where we are now, 30-40% higher, but at least you know that it's no longer as bearish as you initially were thinking. You know, you can buy into strength rather than hope. And you have this outer trend line that probably also needs to be broken as well. Yeah, do you see this outer trend line?
Yeah.
So until we break this outer trend line, until we get above this point of control, this golden pocket, break this outer trend line, then you could think about longing. Actually, on back test, you can start longing and aim for the value area high and beyond, right? That's your long entry higher up, and that's a sign of strength, because that would be a break, a retest, and a continuation of the price movement going up. And you've broken this outside trend line, which is what you want to see. You don't want to see the price, this trend line, to hold the price. But if you're going to long, you wouldn't just long now, because that's hopey. That's just, there's no invalidation. What you actually want to see is you want to see us losing this level and then coming back in. Then you can long it to the value area low. Maybe by the time it does that, it's going to be perfect to exit here for another continuation down. And then you're aiming for this golden pocket area. If that doesn't hold,
and then we get a
sorry,
bump and run. Maybe if we get a bump and run on that trend line.
A bump and run, you're looking for something, yeah, like if it was to drop now, you need a bump. So we haven't had a bump yet. So right now we're hugging this trend line quite nicely. You know, that's not a bump. This is normal. A bump would be, the next candle would be this. So you're creating this big space away from this trend line. And then the price here is brought back up, and that's your bump. And you then don't expect it to continue down like that. You would expect it to break and then run. And then you'll be looking at the highs again. So that's something else to consider. But it's not really happening right now. Right now, the price is just edging away. Let me have a look at the Telegram. Let me see how people are feeling.
Probably crying.
And it's also good to look at these Telegrams channels. I've just got a look. So only 9,000 messages. So obviously a lot of people have left.
What was it before? Like 60,000 or something?
Yeah, 60,000.
Wow. People are dumping it and just moving on.
I mean, this only prints the buys. It doesn't print the sells. So it says buy. Oh, there's a phone call. I need to take this phone call.
No, just mute it.
All right. Yeah, sorry, it was Virgin Media. They're installing internet at my mum's.
You need to go.
No, I'm fine. So I think here, it's very likely. I mean, it's not just going to go down. This is grinding down. Let me just have a look at the channel again. It's like proper hopium. This guy is writing. Look at all the orders, like 268 million orders at 0.0064. So we've gone and come back up from that level.
Never doubt the power of meme coins.
So he was saying there's a lot of orders here. Oh, there was. Look at all that volume. So they're looking at the order blocks, and you can't do that. It doesn't help.
They're looking at the order book, right?
Yeah, order book. Yes.
Yeah, but order books get spoofed anyway. People put in orders just in case, or they just put it in. They take them out all the time. So
why? This guy's writing. Why is Twitter censoring our Grok posts? And then this guy writes, we are currently listed on the following exchanges. More will be updated as we progress.
Maybe Elon's dumping it so he can pump it. He's not even talked about it.
Let me just read. Let me see what they're saying on the live video chat. Any noise? Anyone saying anything? No, it's quiet. There's like 54 people in there. No one's saying anything. People are like depressed. I can tell that they're depressed. They're all depressed. There's nothing. Look at the 4-hour time frame. Look at those candles. It's still. Well, that 4-hour close within the wick. It was a higher volume candle. Yeah. So you could form a reversal here. I'd be looking at the 4 hour for a reversal personally. If you can create a reversal pattern on the medium time frame, that would give me some kind of indication of like what you want to see. Look, this is a level, that's a level there. You want to see some like high volume buy candles, maybe a reversal pattern. You close up there. More buys, and then you want to take that high. That's kind of what you want to see. And then you want to see buying power. You want to see buys. So you want to see high volume candles like that with wicks. And then you want to see kind of some kind of reversal structure. You want to see this level reclaimed here, which we've lost. That would be your first indication of a reversal. You're still coming into this 618 back test area, and so something like this could easily just flop, and that would be your invalidation, you know, because then it could just continue to do that. I think people are looking to exit right now because it's looking extremely weak, and I don't think we've taken any lower level liquidity. Like, we're into order blocks, but we haven't actually stopped anyone out. We haven't actually shook out the market yet. And the big shakeout is going to be at the bottom of this wick.
Yeah.
That's the big shakeout. Once we go to the bottom of this, everyone here, if they're long, they're gonna be like, I'm done with this. Look, I've lost all my money. My life savings are gone. Yeah. And I think once you get a little shakeout and everyone's out, everyone who's sold is sold. Basically, that's what you're trying to do. You're trying to shake out everyone who's willing to sell, and then you can long. And then I think once we break this outer trend line, that will be the safest entry. Break this outer trend line, back test, retest, and continuation. And I think then, wherever we land, let's say we go down to this SFP level here. Just that would be good, because then you have let's say we just do this, just continue going down, up, break up, form a support level there, continue. That's your target there. And then from roughly this area to there, that's a 172% increase in value. You still have to get past this value area low, this point of control, so you have to take profit on the way up.
There, I'm dumping Grok because there's no point.
Yeah. So that's where we're at now. But I don't think this is bearish. I think it's just going sideways now. That's the thing. Like, people are like, is this going to zero? Yeah, it could, but even if it goes down here, it'll probably go down here, maybe just range here for a little bit, and then it'll probably just shoot back up, you know? Because what you'll end up with is every single person who's done a crazy X, a 24X, they'll start buying back up. They'll start accumulating. You'll form some kind of reaccumulation pattern somewhere down here. Now, you don't really want to make a new all-time low, and this is really important. That we have an all-time low here. We want to make a higher low. If you make a higher low, then this is actually a really bullish chart, because you've made a higher low on a higher time frame, right? As long as you make a higher low on the highest time frame, you're bullish. And so the only time where I would start to forget about this asset completely is if we lose this low now. Yeah. After making a new all-time high, we come all the way back down and make a new all-time low. Just forget about this. I wouldn't even bother. Just throw it in the trash can and dump it. Maybe you would try and exit as high as possible, and then you forget about it. Yeah, because you don't want to make an all-time low. Do you know what I mean? Because it just means that everyone who entered, took profit, left. So where's the money coming from? Where's the liquidity? Where's the entrance? You assume the assumption is that everyone who's taken profit up here and done the 24x, all these Grok multi-millionaires, whatever, the assumption is they're going to reaccumulate and defend this low. If they're not defending this low, then they've basically run away with your money. They've stolen your money and run. And they'll probably look to trade INJ or something that will probably do another 10x, and that will be a happy day for them. Anyway, that's that. Do you want to look at anything? Travel's kind of bleeding a little bit.
I think look at Bitcoin and Trvl.
Well, Trvl.
Look at all the 4-hour candles, because we just had a new 4-hour print half an hour ago. So
like people are looking at Trvl and they're going, "What's going on?" Nothing is going on actually. Trvl is experiencing accumulation. This is really bullish. What you're seeing on Trvl is ultra bullish. Yeah, there's hardly any price movement, and slowly people are buying it up. Very slowly. Like, look, I'll show you.
Yeah, it's like it's been at this 30 level for a long time.
You see this red candle? Look at that. That is, the volume on that red candle was 146,000. Basically, someone sold 146,000 TRVL, and look where it is. It's in exactly the same place.
Absorption. Yeah, it's definitely being absorbed. Someone's buying, people are buying, and that's why it's not gone anywhere.
That's why it's not going down. Yeah, and look at these wicks. I was explaining it. Let's say I was chatting to Eric a little bit on WhatsApp. Look at these wicks. These are market buys. It is showing a little bit of impatience. Yeah, but that's fine. You know, like people want to buy big positions. They want to accumulate. So let's say someone wants to buy $50,000 worth of Trvl. Well, he or she's not going to buy it all $50,000 in one go. They're going to buy a little bit. They're just going to market buy a little bit. Okay, and they're not getting the best price because obviously these candles, they go up by 16%. So 6%, 8%. But in the scheme of things, that's fine because, you know, eventually when the price of this token goes up 400%, you're not worried about that small amount. But if you want to accumulate, put your limit orders under the price here, put your limit orders there, put your limit orders there, underneath these wicks, and slowly let the price rise. Go up with the price. The price will slowly go up, which is what you want to see. That will be healthy accumulation. This is fine, but it's not the best way to go up. The best way to go up is our limit orders, and slowly the price will start to ascend, and anyone who's selling the limit orders will get absorbed, and you will end up with healthy bullish divergence. If you're putting limit orders, that's what we want to start seeing on the higher time frame. We want to start seeing hidden bullish divergence, and the way to see that, I'll give you an example so people can see it. We're seeing it now actually on the CCI. You can see it. Look, I'll show you. and everyone uses their own indicators. I use CCI and MACD. It doesn't really matter what you use. You just have to understand it and apply it to your knowledge and become an expert in it. But as far as the CCI is concerned, I'm seeing bullish divergences because CCI, that's a ghost. Yeah. That's a break on the neckline. And we had a breakdown. That's a breakdown. Usually when you see this kind of pattern, the price crashes. Yeah. And it's not doing it. Look, it hasn't crashed. It's still in the same kind of range. See that? So actually the CCI has gone down. This point here, this level here. And the price is higher. That's hidden bullish divergence. That's what the CCI is saying. This pattern, this ghost pattern in the highs is bearish. It's a bearish pattern.
Very bearish. I said that to you. I said, wait, should I buy this? Because then I thought, no, let's just go with it because we look at those wicks. There's market buying, and it didn't go down at all. So,
I'm seeing hidden bearish, and the more limit orders, and you only get these kind of hidden, this bullish divergences, these hidden bullish when people are putting limit orders. Because what's happening, I'll tell you what happens. Let's say, for example, I put a limit order here, like a big limit order, and the price slowly comes down to my order. My order fills, and it's a big order, and it's filling. The price is, for a long period of time, the price is going sideways. What happens is these indicators go down. Yeah. These indicators are going down. The price is going sideways, or even up. Price goes up. The indicators go down. That's a divergence, because normally what you want to see is the indicator and the price mimic each other. They copy each other. They're meant to look the same. So when they stop looking like each other, then you're getting divergences. The MACD also can show divergences too. You zoom in. Let me see if I can see any. You see, there's a bullish divergence. I'll show you. Let me bring this down. Bring this up a bit. Look at this. Higher high. See that? Lower high. Higher low. Sorry. Lower low. Higher. So let me just reset what I just said. Higher low. See, low, higher low. And the low here is lower. So what you're seeing is higher low, lower low. That's a divergence. These are not the same. The MACD, the lows are going down. The price, the lows are going up. That's a hidden bullish divergence. That's basically saying the price is being absorbed. If this shouldn't be higher, this should be down here. If it should be lower, it should be the same. These should look the same. It means the price is being absorbed. It means people are buying this up. You get the same on the highs too, which give you bearish divergences. I'll show you. So you see here, the price goes up, and here the price goes down. That means the price was being sold into, it's being absorbed, and as a result the price went down. But I think on the higher time frame, when you look at the overall pattern and the divergences, look, that's a ghost. See that little ghost? And we have a neckline break, we have a back test. The price is going sideways. Really, the price should be down here by now. If this was correct, we should be here. And so we're getting bullish divergences right now, and that's what the CCI is telling us. The MACD isn't really saying anything. And then if you look at the the weekly time frame, there's a really bullish divergence on the MACD. And you can't trade it. It's just an indication. Look, you see how the MACD goes sideways and the price goes down? See that? That's not correct. This MACD should go down. And it's not, it's going sideways. That means the price, the volume doesn't match the price. So it's been oversold basically. This is trading much lower than what it should be. And that's because there was no volume. And so even though the price went down, the volume doesn't match it. The volume means the price should be much higher. It's been oversold. People are selling it cheap. But it doesn't mean it's going to reverse tomorrow. It just means that in the long term, in the higher time frame, you know that this is being, you're forming an accumulation. That's what you're forming, an accumulation. So my idea still is in play actually. Look, when you look at the weekly time frame, this is my 2-year trend line. We closed above the previous week high. That was the week before last. The week before last. This is a doji. Doji is an indecision candle. We took the highs of these two candles. Took those highs. That's a bearish candle because you've taken the highs. But we've only come to backtest this level. We're still in the range, and we're still above this 2-year trend line. So even though this candle is bearish, and from week open, it's immediately sold into, but it hasn't really gone anywhere. So even though this is a bearish candle, it's not really bearish because it's above support. It's taken the liquidity. Now we should see a sell-off. Now we should see a crash, and it's not happening. So, and also if this is your support level, it's held. So it's actually held horizontal support. It's held a trend line support. We get another hold here on this week. You know, slowly but surely, people are going to be, this price is going to start going up. And all we need to happen for the price to become impulsive is for the price to start trading above this area. And when you start trading at 4, 5 cents, 6 cents, people are just going to be buying like crazy. Because then that's when you start getting FOMO. But what we're experiencing now on the highest time frame, the weekly time frame, is extremely healthy. This is healthy accumulation. All of this market structure that we're forming now is actually really beautiful. It looks like art. This is what you want to see, because eventually, once we clear all of this market structure, once we clear these levels, and this will all form our foundation, our base for the next level up, for the next range. And as long as we keep on forming this higher time frame market structure, and we keep on stepping up, and we're forming more higher time frame market structure, and then in the highest time frame over a long period of time, you're going to end up with a token which is never going to come back down, because you have so much foundation of market structure underneath it, which is going to be its base, its platform. You're not going to end up like a meme coin where it just buys and it just sells off. We're talking about long-term accumulation, and sure, people are going to be taking profit at certain levels, but it's not going to dump unless it's healthy. And then if it does dump, it will just correct really quickly because of all the gaps that are formed in the way it comes down. So we want to see a long accumulation with the price going up. You're basically looking at a long-term hold now with this asset, with this token. And in the context of the Bitcoin bull market, in the context of the change in the tokenomics, I was chatting to Eric I asked him, am I going to be impressed? Am I going to be pleased by the changes that are being proposed? Obviously, the community is going to get a first look at this, and it's going to be published in Discord, I guess, for allowing the community to give their input. But the idea is going, as far as I'm aware, the idea is going to be some kind of store of value tokenomics, where that's going to be the foundation of what's going to be proposed. And they're going to build on top of store of value. Basically, we're going to reinvent Bitcoin and our network, our physical network, which is peer-to-peer transactions, short-term vacation rentals, peer-to-peer transactions are going to secure that.
Yeah.
So that looks pretty good. I think we're in a long-term accumulation. I don't really see it. You can't really do anything apart from just slowly accumulate. Look at that. Look at that. The market buy went up. It went and took the high there.
No,
look at that.
We're trading fundamental. We don't care about fundamentals. We're
David,
looking at
that's a higher high. Look.
Yeah, it's true.
Only on Mex.
We're trading technicals. But it's good that there's good fundamentals changing things. Maybe the fundamentals are changing the technicals in this.
I think there is a level of that, yeah. Look on Gate, it didn't make a higher high. I think when you want to look at higher highs, you want a higher high confirmation.
Close.
Yeah.
You know, a proper close with it. A proper close and the candle not streets.
That's KuCoin. This is Bybit. And obviously the BTC charts in the lows. We're above this previous. I mean, you want the BTC TRVL to go up, take out this high, nice close up there, come back down to make a higher low for continuation. I think once the BTC and the TRVL USDT chart start saying the same thing, you're going to get some real impulsive move. But right now we're in a long-term accumulation. I would not be upset at all if this just went sideways and until April. That would look pretty good. Or even better. What would look even better is if it went up and it was above the value area high. That would look better. We could get a step up now to like 40 cents. This and this is the lowest point of support, this LPS. I think what we're experiencing now is another test. This is the second test. So you could say there's another test here somewhere. And then if we can test and then come up and then get above this lowest point of support somewhere. That would be good. And I think then we've created enough market structure to hold above, and I think a lot of people on this token are going to be, it's going to be a long-term hold. They're going to be long-term hodlers because of the network that's being built. It's completely different to, like I was looking at the Propbase tokenomics and I don't like it at all because it's just the same as every other coin. It's like they're trying to get as much, create as much increase in value in the short context of the bull market. But when you're looking at like TRVL, it's completely different. The whole thing looks different. So I think this is more of a long-term accumulation. Once this does go up into the highs, it's going to look really good. This is going to look like a big cup. I don't know how high it goes. Maybe we can form a handle somehow. Actually, maybe it'll be different. It'll be like this. Maybe like that. Or maybe
that would be nice.
Maybe the next bear market is going to be a long handle. Down there. For another move up. That would be really nice.
But I think of Bitcoin.
Right. We're still in this wick.
Yeah, in that wick we are. I think Daniel said he bought that dip.
Of course he did.
But did he? You see, did he buy it because with like leverage? Did he buy it as just add to the bags? Did he buy it to where he's got an invalidation? Do you know what I mean? Did he just buy it to hold it?
I suspect Daniel's always got an invalidation, but high volume, lower. Did it take liquidity? No. No SFP. You want to clean up these lows, you want to just go and take them. SFP that low.
Yeah, I think the same.
Just get rid of that. Get rid of the liquidity there.
There's a gap down below as well. I think it's on. If you CME,
oh, there is.
You've got the CME in there. There's a gap in the CME.
I'd have to
is what Eagle would say.
I'd have to go to.
If you lose the current low, the wicks, then there's nothing. BTC1, yeah. There's a gap there. He thinks if you lose that low, you're just going to fill that wick, and then it'll go from there.
Oh, that's nice. So all the way down to. So the level that you're looking at for a long.
That was the
39640.
I think the gap is a long.
Knock out.
It's basically when it broke out from the the triangle. I think it was actually a weekend, so that's why CME gapped.
Yeah. So that's your gap. You're long in that, huh? Just set a limit order. Just set a limit order and have a 1%. Maybe your invalidation could be under this wick here. Like not much, like $300. Or you could come back here into this SR flip and just lose that. But that would be good, huh? Let's fill the gap, SFP, and everyone's going to be selling because they're going to be like, this is ugly. And then V-shape all the way up. What's the sign of strength? Well, yeah, I mean, if you want a sign of strength, SFP, fill the gap, come back into the value area, go up. Then you have some kind of really messy trend line here as well. And break it and go up. What do you think?
Yeah, I like that. I'll probably take it in that gap.
Try and catch it in the SFP. Yeah. And then take profit at the value area low.
Yeah.
And then see, it might not go, like, look, this could come back down to test the bottom of that wick to go up like that. So you might get a back test on that SFP line. After you've SFP, they might come back to test the SFP line before it breaks up to continue going up. But I mean, that's your trade. It's basically the SFP into the gap, however long your stop loss is, and you're aiming for the highs and see what happens. But realistically, you're going to get the first line of resistance is going to be there. Look, that would make sense. Look, if it comes into the gap, you've got the golden pocket right there with the back test of that. That fills all of that. That would make sense. So there, somewhere there. That's the trade.
Yeah.
What do you think?
Yeah, I like those.
I'm gonna just be AFK for 5 minutes. Do you want to just chart something while I'm away, or do you want to call it?
Just call it. I'm not feeling too good for this.
Sorry, mate. All right. Well, that's our stream, and I hope that was educational for everyone.
I've just been scalping BTC and Inge, so
set some alerts on those levels, and then let's see. Yeah. Let's try and trade that BTC long. All right.
I don't need alerts. I'm going to be looking at it every minute. That's sweet.
Cool. All right.
That's all I do. All right. Yeah.
I'm going to end
stream. Talk to you later.
Right.
Yeah, good. Good stream.